Good morning, everyone. Thank you so much for joining us, and happy Friday. It is Tuesday, February 5th, and we are going to take a little bit of a special look at the markets today. I don't necessarily have a trade for you today, but what I want to talk about is some of the market structure that exists that allows for better trading. So we are going to talk about SPY in our Friday special, and why the benchmark ETF dominance has waned, and why this is so great for the market. So, what does that mean when I say that the benchmark dominance has waned in SPY? Well, first of all, let's define what benchmarks are and why they're so important to Harvested Financial. We look at the benchmark ETFs and we define those as IWM, SPY, and QQQ. And the reason we choose these ETFs is because of their deep liquidity. Because there's not only such tight spreads that exist, where we can execute in very narrow spread ranges, giving up as little edge as possible when we try to execute that. Most of these names are only a penny wide, maybe 2 pennies wide, and there's also a lot of liquidity on the exits. So when you come to expiration, when you come to roll your position, there is definitely someone willing to take the other side just because of how much volume there is there. One of the aphorisms about the market is this idea that liquidity begets liquidity. And so lots of volume, lots of liquidity, it is a positive feedback loop in these benchmark ETFs. So in SPY, IWM, and QQQ, we see lots of opportunities. We see those tight spreads that I just talked about, but we also see a very granular listing of options strikes. So we have a 361, 362, 363 strike in these names. Dollars apart, sometimes only 50 cents apart. That compares to some of the less liquid names where we only see strikes listed every $5, every $10. We also see fewer strike listings. So SPY is really the leader of the pack here, where we have Monday, Wednesday, and Friday expirations. But in some of the top names, there's around 400 or 500 names that have the weekly expirations, but that also provides more opportunities for liquidity. So more frequent listings, tighter spreads, and tighter strike granularity all contributes to this idea of liquidity that is extremely important when executing portfolios. The tightness of those spreads allows for the execution, like I mentioned, and the tightness of the strikes allows for precisely tuned risk exposure. So having that exact custom layer and level of exposure that a client is looking for makes these ETFs extremely beneficial to trade for us. So we love seeing the liquidity here. I love how much volume is trading in SPY and QQQ and IWM, and I love what that delivers to retail client options portfolios. It allows us to deliver a model portfolio for as little as $1,000. So having that precisely tuned risk exposure is really beneficial in our mission to bring derivatives to everyone. So why am I so excited about the fact that this dominance of these names has changed? Well, I'm excited about it because that means more opportunities across more different names. So as we are about to see, I'm going to pull up the NYSE's Q4 volume report for 2020, where they explore this a little bit more. So let me just share my screen briefly, and I will pull myself up into the corner so you can see what I'm talking about. Whoops. So looking at the 2020 options year in review, so this came out about 2 weeks ago from the NYSE, and of course, like they introduced, 2020 was an extraordinary year for options trading. I wrote about this 2 or 3 weeks ago, that 2020 was a year for options, and the booming volume has only continued. We saw almost every day in 2021 volumes approaching, if not over 40,000 contracts a day. That's fantastic. But more fantastic than this growing pie is the distribution of the pie. So the dominance that has previously, or the SPY, IWM, QQQ dominance is falling, and there's an increasing breadth in the market here. So let me pull up some numbers just to show just how spectacular this was. So looking at the overall volume level, like I said, year for options, 27 million contracts traded a day on average. And that's not just looking at that's the annualized number, I should say. So that's in Q4, it was even higher. The averages were up in the mid to high 30s. So, and like I said, that's continued into 2021. So that compares to these 17, 18, 14 million contracts a day that we saw for almost all of the 2000 teens. Quoted spreads, size coming down, size coming up a little bit with the spread coming down a little bit. Always great to see. More size, tighter spreads, more liquidity, depth and access for bigger size contracts, and more volume is going to tighten those spreads. But I do want to talk about the top symbols here, because this volume concentration is particularly what I find interesting. So SPY still leads the top of the pack, that's no surprise. This is the benchmark ETF on the S&P 500, and it's going to get the most volume. It's one of the most actively traded indices in the world, and so the fact that its premier ETF is getting the most volume is not surprising. Many people, funds benchmark against this, use this as a hedging protocol. So SPY sitting at the top, great. That's still continued to be good. But what I'm looking at most interestingly is the percent of total number, that negative 3.1%. Seeing that fall 3 full percentage points means SPY was about 15% of overall volume last year. Now it's only 12. But these stats are kind of crazy because it shows just the trend of where this is going. So we saw an all-time high in March of 24.6%. So when that pandemic trading was happening, of course people were rushing to the exits via a benchmark ETF and doing their hedging. So seeing that high concentration in March is not particularly surprising. But what's great is that in December, it fell to its lowest level. So as that volume trend has continued to go up, SPY's dominance has continued to fall. So we see the lowest level since January 2011 was notched this December, with SPY only at 10.6% of volume. So as SPY's relative percentage of the volume is coming down, we're seeing a rise across other names, and we're seeing a rise in names like Apple. We're seeing a rise in names like Tesla. Apple's up 2.2 percentage points. Tesla's up 1.7 percentage points. NIO, the other electric vehicle maker, is up 2.1%. So we're seeing a lot of really interesting growth in names, in single names. And as this breadth expands across markets, I should say across other names within the market, we're going to see better strike listings in those names. We're going to see better tighter markets. We're going to see more activity and more volume because liquidity begets liquidity. As we see tighter markets come in here, more strategies are able to realize themselves in these names. So where it might have been cost prohibitive to do single name structured products or trade specific types of option strategies in these less liquid names before, as more liquidity comes in, we're going to see more potential new customers come into the market and develop their strategies and contribute to the whole liquidity ecosystem. So really, really good things on the horizon here for this maturing options market. So we're not only seeing that growth that's fantastic in the market, but we're seeing a diversification and a broadening and a breadth. And breadth equals strength in the options markets. So investors, we have a lot to celebrate today, and we have a lot to look forward to as these products mature and we see increasing robust liquidity develop for the execution of option strategies. That's fantastic. We are so excited about that at Harvested Financial because strategy execution as a service is our business, and delivering systematic option strategies to customize individuals' portfolios is getting better and better as this option market grows. Be sure to hit the subscribe button. We're giving out trade ideas every day here at Daily Bread, and you can also check out our Twitter at harvested_DAFE because, of course, we believe that derivatives are for everyone. Thanks again for tuning in. Happy Friday. I hope everyone's trading is absolutely spectacular today, and we will see you again on Monday.